Hey everyone, Ian King here, editor at Strategic Fortunes. Joining me this week, Steve Fernandez, and we are going to answer the question, is inflation coming back? We had a huge number come out this week on Tuesday specifically. The Consumer Price Index shows that prices were rising 0.9% month over month. Steve, you've got some more details for our viewers. Please share with us what's happening with the CPI and what can we expect with inflation in the future?
Right. So big CPI print, it was actually the highest since 2008. If you actually look on it on a year over year basis, it was 5.4%, which is much higher than what we usually expect as like a 2% baseline. But if you dig down and look at what was driving that inflation, it kind of points to the idea that this is relatively short term in nature. So I don't expect high inflation in the future years per se.
Right. And then another really important point to think about is like what drives inflation, right? I mean, the idea that something is scarce, whether that be a good or service, and then also demand on the other side. So prices rise when there's a lot more demand than there is supply. And as you said, there were some specific components of the economy that showed relative scarcity in the last couple months. And obviously, there's some reason for that, which you can tell us about. And what were those specific components that showed a huge increase in the CPI?
Right. Centralized across a couple of components like energy and transportation services. And when you think about that, it really makes sense. We had oil and gas companies really had to halt their production and their exploration activities because no one really knew what was going to happen over the moderate term with COVID-19. But it was obvious right away that short term, they really couldn't sustain their productions. In order to stay afloat, they really had to halt everything completely. So they weren't equipped for a quick return to normal. You can make the case that it may not be as quick as it could have been. Nonetheless, they were not prepared from a supply standpoint. So as you mentioned, it's created a scarcity. And if you look at the numbers, it's fuel oil is up 45% year over year. Gasoline is up 45%. Even used cars are up 45%. Who would have thought having a used car would be a good investment over the last year?
It's been a better investment than gold, apparently,
Right.
having a used car. So let me ask Steve. I mean, I've been in the markets for a quarter century now. God, I feel old. And every time we see a little bit of an uptick in inflation, we have these investors and pundits that come out that I call the inflationistas, and they're like the boy who cried wolf. We've been hearing about inflation now for 25 years, and that the CPI number is rigged and it's all fake. But there's a bigger story going on here. It's something that you and I have been discussing. Technology is letting us do more with less. And I don't think of the markets as scarcity or this sort of, Thomas Malthusian scarcity, which leads to inflation, but it's the idea of ephemeralization. And Buckminster Fuller quoted this. He had this great quote 100 years ago. And he said basically that technology allows us to do more with less and less until eventually you can do everything with nothing. And so if you think about everything from, Uber to online grocery shopping, obviously e-commerce is part of it, to artificial intelligence, to how software is letting us, run companies with less people, it's just making everything more and more productive. And, that's why I'm so excited to invest in a lot of these growth areas, because it's just allowing for widespread prosperity from, more productivity, allowing us to do more with less resources. Steve, what is your take on that? Now, how do you feel about that? I know you share similar views as I do.
Definitely. So technology in itself gets cheaper over time. If you look at like the cost of storage, 20 years ago, it's down like literally 99.99% today. And with the cloud and all innovation and technology in itself, and even when you go back to like used cars and compare that to what the price of a electric vehicle is going to look like in 5 years, you can make the case with declining lithium ion, it's the opposite of inflation. And as we really grow these trends, that's really what's going to dictate what we pay. I mean, I'm not saying that our product is necessarily going to be cheaper, but we're not going to see technology that we're using increase that much.
Yeah, I agree with that point too. And so the other thing we also talk about is like whether or not the Fed thinks inflation is relevant, because I always say I watch the Knicks on TV and the ref misses a call and I'm complaining about the TV, but like my view doesn't matter. Neither do the 25,000 viewpoints in the stands of people cheering. The only thing that matters is the ref. And in the markets, the Fed is the ref. And so they're calling the balls and strikes. They're calling the fouls. They are monitoring inflation. And as far as we know, Jerome Powell is saying that inflation is still transitory. So, my view is never fight the Fed. You don't want to be on the other side of the trade, because obviously they can just create reserves and add them to the bank balance sheets and inflate markets like they have. We've seen this reflation trade happen over and over again over the last 10 years. And so, Steve, Jerome Powell this week came out and said that inflation is transitory and that it's going to cool down in the next couple of months. Do you know like what specific categories Powell was looking at? I think it was in the used car market and also in rental cars, sort of the reopening trade. What else is part of the reopening trade?
Yeah, I mean, the opposite of what you would expect to drive inflation, like even motor vehicle insurance, right? Like you said, the reopening trade. So if we're commuting, the cost of gasoline is going to go up. The cost of airfare is going to go up. It pretty much anything to do with being out and about is more expensive than it was. And it should be no surprise. And I think people that realize that are really using any weakness in stocks as a buying opportunity, just because there's algorithms that trade based on these numbers. They automatically recalculate valuations and things like that. And frankly, provides a lot of opportunity.
Mm-hmm. And that brings us back to a broader point. Low inflation, low interest rates, growth stocks outperform value stocks. We saw a little bit of the value trade start earlier this year when growth stocks were underperforming, but now growth stocks again taking the lead. And that is obviously good for a lot of the portfolios that we manage at Strategic Fortunes. So let's leave it there, Steve. I want to thank all you viewers for tuning in. Any questions, if you agree or disagree with what we have to say, please leave it in the comments below. We'll be sure to address them next week. If you like what we have to say, hit that like button. It allows us to share our content with more subscribers. For myself and my friend, Steve Fernandez, have a great weekend, and we will speak to you soon. Thank you.